Hi, I'm Dalia, founder of Streetwise Mortgages. I am getting the question of the century these days, which is if my mortgage renewal is coming up or if I am purchasing a new property, should I take a fixed or a variable rate mortgage? To answer this question, I consulted with my rates oracle, and unfortunately, this time her crystal ball is not working. So I'm going to share my observations and thoughts on how you can make the rate decision that is right for you right now. Up until the recent Bank of Canada rate increase in September, the 5 years variable rates had an advantage over the 5 years fixed rates. This edge has since diminished. The lowest national 5 years uninsured variable rate right now is at 4.9. And the lowest national 5 years fixed rate is at 4.84. And we are not yet at the top of the hill for variable rate increases. Given the tone of the Bank of Canada during the last meeting, that inflation is still persistent, although the average core inflation dropped to 5.23 from a revised record high of 5.43 in July, the market now expects that there will be another estimated 75 points of increase to the Bank of Canada's overnight rate by the end of 2022. It is likely that this will be the last round of increases, but the final decision, as we all know, will be guided by where inflation, unemployment, and GDP are at the end of the year. If history repeats itself, the central banks eventually lift off their feet off the brakes to re-stimulate the economy once inflation is in check. This won't happen anytime soon, but it is possibly going to happen sometime in 2024, according to many industry experts. With this in mind, although the 5 years fixed rates right now seem to be more attractive, if you choose to go with a 5 years fixed term, you would be locking in at the height of the rate cycle. If you can't sleep at night or want the certainty of having a fixed payment, I suggest one of two options right now. The first option is to go with a shorter term fixed rate of a 1 or a 2 years term, or to take a 5 years variable rate mortgage with a fixed payment. And when the prime rate goes up, your payment will remain stable, but the allocation of how much goes towards principal versus interest changes. When rates go up, more goes towards interest. If you can sleep at night and you want to stay on track of paying down your mortgage as rates rise, then stick with an adjustable rate mortgage, as the payment will change as the rates change, and you would still pay down principal as per the original plan and as per your original amortization schedule. With the variable or adjustable rate mortgage options, you will position yourself to benefit from the savings that will kick in once the rate starts to go down again in the future for the remaining term of the mortgage. For the 1 to 2 years fixed rate choices, you will likely have more attractive rate options to select from in the future at the end of the term. If you are selling a property and buying a new one and the closing is within 90 days, I would like to remind you of something very, very important right now. I'd like to remind you that you may be standing on gold and that you may be able to port a very attractive low rate fixed mortgage or a great variable rate mortgage with a great discount from your previous property over to the new property. So check with your lender if your mortgage is portable, and you will have to qualify to port it. So do not discount that option and think that you must break away from the previous mortgage and get a new one at today's rates. If you have a mortgage coming up for renewal in the next 6 months, my suggestion is to look into that renewal early on and not wait for the last minute. So this way you can benefit from locking in options now and being ahead of the curve of any future rate increases. If you're looking for guidance on your rate choice, or if you have a renewal coming up and you're looking to explore your options, feel free to reach out to myself and my team at info@streetwisemortgages.com, and we would be happy to guide you.